This is Mark the Meerkat Trader in with a broad market review for July 29, 2015. Bullish or bearish day on Wall Street? Ding, ding, ding. Bullish. And not out of the park, but it was to the upside. Let's take a look at the numbers. S&P up 0.69%. The Dow up 0.63%. The Qs then at plus 0.41%. And the small cap Russell up 0.26. Again, leading the way up today as in yesterday were the Dow and the S&P 500, and lagging a little bit were the Nasdaq and small caps. This is not quite as bullish. And bank, it was a negative for a long time today, and then finally did pull itself up, lagging a little bit, but still it's not as bearish as it was yesterday. And the VIX, if you remember, was an up day, but the VIX went up 13%. Well, today, as soon as Yellen talked for the Fed announcement, it dropped. It got sucked right out of the market, and now it went down 13%. We're at 13.44. And oil again, when oil from the inventory numbers at 10:30 Eastern Time took off, well, that's when the market did. It struggled again early today, and then when the oil took off, it took off too. And then when the Fed spoke this afternoon and said, nope, we're keeping interest rates the same, what a surprise, what a surprise. And the market then recovered a little bit as well. Let's take a look here at the charts. Here's the S&P 500 daily chart as shown in the SPY. And again, we came down to the 200 period moving average. Last 2 days, bounce. Okay, so it looks nice, doesn't it? But let's take a look down below here. Look at volume. Well, as it was falling, what was happening to volume? It was increasing. And now we've had 2 up days in a row. It's making this officially a swing low. And what happened to volume? Going down. That's not as bullish. That's a little bit empty, as we would say. Let's take a look at the Dow Jones Industrials on the DIA Spider. And it came down here. We bounced up, and then we're right back down here. This is now, again, officially a swing low, as we have 2 higher candles now. We're now in a leg up, but a couple of problems I see here. Again, volume. It was increasing as it was falling and decreasing as it went up. And where is it hitting its head? Right there on the wick, it almost touched it perfectly, was this 200 period moving average, and it came off of its highs. Closing up here. Yes, it was an up day, but a little bit of thunder in the distance here. Then we've got the Nasdaq. And again, it's been a little more bullish than the rest because it went up to all-time highs a few weeks ago, and now it's been pulling back here to the 20 moving average, so it's above the 20 moving average, and then bounced up. And again, volume increasing as it fell, decreasing as it goes up. That's a little more bearish than it is bullish. And then we are in a downtrend, as we talked about yesterday on the small caps. Coming down to the 200 period moving average. It did hold as support, and now starting to work its way back up. Not officially a swing low yet because of this huge tail down here from yesterday. And it does not have that volume issue. Yesterday, huge volume, and this is a potential reversal candle. We're starting to follow through. Again, volume wasn't quite where we needed it to be. We need to have strong volume for that to reverse. But it's below all the other moving averages here. A lot of resistance to work its way through. So you remember yesterday I talked about Twitter and the fact that as soon as they announced, it went up 11%. And then it pulled back to about plus 5%. Well, here's the problem with Twitter here, that they had their conference call and they said something they didn't like, and it opened up down 10%, bam, and then it ended up the day today. Look at this here. It ended up down a total of 14% from close yesterday. So what seems to be really great numbers sometimes does not turn out that way. So if you saw the announcement and saw the price jump up 11% and you went to bed, when you woke up this morning, it was down 10 and it ended up dropping another 4 after opening this morning. It just goes to show you it's not the news accounts, ladies and gentlemen. It is the market's reaction to that news. Yelp, if you remember yesterday too, it missed earnings and it was low basing down here, and then bam, lost 25% of its value. 25%. And look at the volume today. Do you think people are buying? I think they're buying it short or selling it. Boy, that is a tremendous loss of value. Right after closing the day, Facebook did announce here, and it was running up into opening today, but let me show you the after hours chart here. And right when they announced, they beat both revenue, they beat on earnings, they beat on users. And what happened? It dropped $5. Bam, just like that, or 5%. Bounced up, came down again, and now it's working its way back up slowly. They have a conference call after this recording, so I'm sure that it will fill in some more news. But here, they made earnings, and there was a huge drop. It just goes to show you. And once again, it's not the news that counts, it's the market's reaction to the news. That's where we have to play. So, this is Mark the Meerkat Suffering. Both Des and I will be traveling tomorrow, so no recording tomorrow night. But look forward to Des's weekend review this weekend. For now, just remember that trading is all about probabilities. There are no guarantees. And as Clint Eastwood says, if you want a guarantee, buy a toaster. Trade well.